Welcome to the deep dive. You know how this works? We take something super complicated and try to make sense of it. Today, it's the Sonos Q1 2025 earnings call. By the end, you might be ready to adjust your Sonos stock holdings.
Just kidding, sort of.
Right, but seriously, you will have a way better grasp of where Sonos stands.
We'll break down the key takeaways, go over the financials, and figure out what this all means for Sonos moving forward.
And of course, we can't forget our This Is Not Financial Advice segment.
Where we'll come up with a totally out there trade idea based on, well, all this.
But first, a little context. Sonos released their earnings before the market opened. Then they held the call later that day.
Kind of unusual, right? Probably has something to do with their restructuring announcement, which included layoffs. They wanted to clear the air for investors ASAP.
Makes sense. And speaking of big announcements, they also have a new interim CEO, Tom Conrad.
He's been on the board, right? Seems very focused on taking the company in a new direction.
Yeah. He's supposed to be super hands-on, especially with the software team, which has gotten some flack lately.
Interesting, they brought in someone with his background. He's led product and engineering teams at some big names like Apple, Pandora, even Snapchat. They definitely seem to be prioritizing the software experience.
Definitely. And speaking of shaking things up, there's the whole restructuring and layoffs thing.
Right. So Nosos let go of around 200 employees, including almost 50 managers and execs. They want a leaner operation, and unfortunately, these tough decisions are sometimes part of that.
Makes sense. They're aiming for some major cost reductions, like $60 to $70 million in run rate savings by fiscal year 2026. For those who don't know, that's basically the yearly cost reductions once everything is in place.
Exactly. So they're tightening their belts for sure. But how did they actually do financially this quarter?
Yeah, that's the big question.
Well, revenue is down 10% year over year.
Not great.
Not great, no. But it's actually better than the 22% to 9% decline they initially projected. So there's that.
I wonder if the strong demand for their new Arc Ultra soundbar helped them out there. I know they said it was exceeding expectations.
Definitely. They even said the Arc Ultra helped them reach their highest ever quarterly market share in the U.S. home theater market. Pretty big win, especially with the economy the way it is.
Definitely a bright spot. What about profitability?
Their gross margins were better than expected, too, 44.7% on a non-GAAP basis. They said it was thanks to better cost management and a more favorable product mix.
So managing things better and selling more of their higher margin product.
Exactly. They also reduced operating expenses both year over year and compared to what they projected, like a 31% decrease in non-GAAP G&A expenses year over year and a 3% dip in R&D spending. Sounds like they're serious about financial discipline during this, I guess you could call it a transition period.
Seems like the new CEO is making his mark already. Aside from cutting costs, what else did we learn about his vision for Sonos?
He's laser focused on what he calls the core experience, basically making the software and user interface better.
Smart, especially after those issues with their app last year.
Right. He admitted there's a lot of work to do, didn't give a specific timeline for improvements, but it's clearly top of mind.
Makes sense. And what about new products? What's on the roadmap?
They confirmed there are new products in the pipeline, but they're keeping quiet on the details, like when and how many.
Probably playing it safe with all the changes happening internally.
Probably. They did talk a little about the Ace headphones, which they launched last year.
Oh yeah, those. How are they doing?
No hard numbers on sales, but they said the Ace headphones brought in extra revenue and customers seemed to like them. Makes you wonder how that messy app rollout impacted sales, though. The timing couldn't have been great.
True. Okay, so they're streamlining, focusing on software, and being secretive about new products.
Yeah.
What about inventory? I know they had issues with too much inventory last year.
Yeah, well, they said channel inventory is at a comfortable level now, so good news there. They've probably worked through most of that excess stock and are in a better position now.
That's good to hear. So we've got a company going through some big changes, a new CEO with a clear vision, and some positive signs on the inventory front. Anything else stand out to you from this earnings call before we move on to our This Is Not Financial Advice segment?
What I find interesting is, even with all the challenges and uncertainty, Sonos still seems confident about their long-term growth. They see a big market opportunity in their current product categories and in other areas, too.
Interesting, especially with how the economy is right now. They're definitely betting on their brand and their ability to innovate. It'll be interesting to see how it all plays out. But now, let's take a break from reality and enter the land of speculation. When we come back, we'll brainstorm a totally outrageous but potentially brilliant trade idea inspired by all this Sonos talk. Stick around. And we're back with the deep dive. So we just went through the Sonos Q1 2025 earnings call. And now it's time for
This is not financial advice.
the part where we throw caution to the wind completely and brainstorm a totally crazy but maybe kind of brilliant trade idea based on, well, all this. So ready to go off the deep end.
Always up for that. Okay, let's think back. Sonos is clearly in the middle of some big changes, streamlining, cutting costs, really focusing on that software experience with the new CEO.
Like hitting the reset button, but in a strategic way, right?
Exactly. And that got me thinking, what if, this is where things get hypothetical, what if Sonos becomes an acquisition target?
Okay, hold on. I'm listening. Who would even buy them?
We'll start with the tech giants, like Apple or Google could see Sonos as a way to boost their smart home stuff.
Right.
Sonos already has a reputation for great audio, a loyal following. Integrating that into what they already offer could be, I don't know, a power move.
Yeah, I see that. And don't forget about Amazon. They're already huge in the smart speaker market with the Echo. Adding Sonos's high-end audio expertise to that, they'd be unstoppable.
Right. Or we could go a totally different route and imagine a private equity firm coming in, take Sonos private, make things even leaner, and then maybe take them public again later at a much higher valuation.
It's like the corporate version of a makeover montage, but with a potential for a big payout in the end.
Right. When you start thinking like this, the possibilities are endless, which is why this segment is so much fun. But of course, gotta say it, this is all hypothetical.
This is not financial advice. Don't base your investing decisions on our crazy theories.
Please. But it's fun to think about these scenarios, right? Especially with all the changes happening at Sonos.
Okay, so let's pretend for a second. If someone was crazy enough to go with this whole acquisition idea, how would they even play it?
I mean, the simplest way would be to just buy Sonos stock. Hope for an acquisition announcement that sends the price through the roof.
Yeah, but that's a little too boring for our This Is Not Financial Advice segment. Let's spice things up.
For the risk takers out there are always options. You could buy call options on Sonos stock. Gives you the right, but not the obligation, to buy shares at a set price by a certain date. If our crazy acquisition happens and the stock price goes up, those call options could be worth a lot.
Options. Adding a little leverage and a lot of risk.
Right. Options trading is not for the faint of heart. It's complicated and can be dangerous. You gotta understand how they work before you even think about using them.
And let me say it again. This whole segment is not financial advice.
We're just two podcasters messing around, exploring some what-ifs. Don't make any investment decisions based on this.
Please, do your own research, talk to a financial advisor if you need to, and remember, don't invest more than you can afford to lose. Okay, we've had our fun with this Sonos trade idea. That was a wild ride.
It was. It'll be interesting to see what happens with Sonos over the next few months, years. Who knows, maybe our crazy trade idea won't seem so crazy after all.
Or maybe it'll be even crazier. Only time will tell. But for now, let's move on to a company that's a little less speculative.
Yeah, a company that's maybe a little more, I don't know, grounded in reality.
Right. Maybe one that actually makes consistent profits.
That would be nice.
So we've spent this episode going deep on Sonos's Q1 2025 earnings call, financials, restructuring, and even some, shall we say, creative trade ideas.
Right. We've seen Sonos is facing some real challenges. You've got softening demand, the aftermath of that whole app launch thing, and of course, more competition. It's all putting pressure on their bottom line.
For sure. But even with all that, there are some bright spots too.
Absolutely. They beat their own revenue projections for the quarter. Demand for the new Arc Ultra soundbar seems strong, and they're taking action cutting costs, streamlining operations.
And they're still all about innovation.
Right. They were vague about upcoming products, but the message was clear. They're not just sitting back. They're still putting money into research and development, and they see potential for growth in their existing markets and new ones, too.
So the big question, what does this all mean for investors?
$1 million question, right? And there's no easy answer. Sonos is at a crossroads. They're making some big moves, and no one knows for sure how it'll all shake out.
Definitely a lot of uncertainty.
If their turnaround works, if they can regain their footing, the stock could be a good investment for those who don't mind a little risk. But if they stumble, well, there's definitely a downside.
Absolutely. This is where doing your own research and knowing your own risk tolerance comes in. There are never any guarantees in the stock market. and Sonos is no different.
And just to say it again, everything we've talked about, especially that crazy acquisition scenario, not financial advice.
Seriously, folks, don't base your investment decisions on our speculative ramblings. We're here to inform and maybe entertain a little, not tell you what to do with your money.
Exactly. Talk to a financial advisor if you need to, and remember the golden rule of investing. Don't invest more than you can afford to lose.
Couldn't have said it better myself. Okay, enough with the disclaimers. I think it's safe to say Sonos is a company worth keeping an eye on. Their story isn't over, and we'll be watching to see how their strategy plays out in the coming months, years.
Who knows? Maybe someday we'll look back at this and be like, remember that crazy Sonos acquisition idea? Turns out we weren't that far off.
Stranger things have happened. But for now, that wraps up our deep dive into Sonos's Q1 2025 earnings call.
Hope you found it helpful, entertaining, and maybe even got you thinking a little.
Thanks for tuning in to the deep dive. Until next time, happy learning.